Hello guys! Today we'll share with you some targets and trading techniques of Gareth Soloway. Soloway has almost 20 years of experience as a professional trader. He devoted himself to the study of technical charts throughout his early career. So before we start, don't forget to give this video a thumbs up and subscribe to our channel. Soloway explained that we were stuck in this range, came up here, came down, bounced and got hammered on this lower level it held. And then it looked so optimistic just a few days ago when we surged above this line, closed above it, and got this pause candle right here. And then it just gave it all back and kind of put us back in this channel. He stated that he is still marginally bullish on Bitcoin. He believes that there are too many bears out there. There is a propensity for any type of asset to attract many bears. According to Soloway, price action will continue to move in the opposite direction until the situation stabilizes and the charts maintain this lower level. There's a level around 28,700 right here, followed by this lower channel line, which is truly an outstanding channel. We can see it hit here. Punctured here on the UST, panic the Terra Luna debacle. So that's truly your line in the sand, similar to his. Soloway has roughly 12 stakes in his portfolio. So he is not alone when it comes to the lower level he purchased. He was a touch short on the first flush, and it's been in and out of the money for him. He'll continue with it as long as we keep this down sloping trend line because that's the line in the sand. If it gives way, Soloway believes we'll be at 20,000. As long as it holds, he said, he's tossing the dice and believes we'll get enough movement to reach 34.5, 35, and 38,000. In the midterm, he remains gloomy, adding that we have yet to witness the necessary watch out in crypto. It started with Terra Luna and UST, but there has to be more. It has to happen to more spots, so the way he saw it, we had to close above, which is step 1, so breakouts are 3-step processes. Furthermore, what we actually want is to avoid being caught up in an institutional game. Institutions enjoy this type of maneuver in which they take a chart above a level and trick everyone into thinking it's a breakout. Consider how many Bitcoiners watched this and thought it was a breakout. They jump for a long time, and then it's like pause candle reversal, and they take their money, and that's it. This is our first closure above that line, and he wants to see a close above that candle's high to confirm it. As a result, the higher that candle is right there, we look for what is known as confirmation candle breakout. That institutions will only commit so much money to reversing the move, and the longer it stays and the higher it goes, the more money it will attract on the long side. They can only fight the struggle with a restricted budget. They're not going to put themselves in a position to lose $1 billion in order to make $100 million. So normally, if we get that close above now, you have a legitimate breakout. Now it's off to the races. We didn't get that, and we got that spinning top and then unfortunately a quick reversal. Soloway expressed disappointment because he was still hopeful that the sideways candle would form a bull flag and then split up, and it ripped our hearts out in that regard. So it doesn't rule out the possibility. We might easily go back and ultimately confirm. But if you do confirm, pay attention to the move that follows. At that moment, it's a true breakout. Soloway feels it's critical for investors and traders to know that emotion is what drives people, particularly the retail public, and that institutions will try to use that when they are looking to make money. So they'll try to exploit our greed and our anxiety. When we had the Terra Luna incident down here and it was below this trend line, so many people simply gave up and said, "I'm done." And what happened was that we went right back up the same thing. As purchasers arrive, the sentiment begins to suggest that this is going to be a big breakout. We're going to start reaping higher, and they have a tendency to just reverse that on us. So we have to make certain it's a true breakout before we commit. He thinks it's terrifying. and they have designed these algorithms to perform these kinds of games, and it is shark-infested waters. No doubt about it. Soloway believes that the highest to minimum upside is only around 33,000. We've already kissed, so his guess is that we need this level here, which is a low pivot of roughly 34.5. We need to break out of this channel. Soloway is slightly bullish because it's a risk-reward calculation, and we have this white trend line down here that's shielding us. And we have this one, and this white one is the big kahuna right here. This is the fantastic channel that we've hit here, and we're still getting bounces. The size of these bounces off this line is massive, so Soloway favors it since he has protection underneath and realizes that if it breaks, he will just stop out. He said that a $4,000 loss is hardly the end of the world. There's a 10 to 15% exit plan there. With 1725, 1715, Ethereum has a significant support level. We can see where the low was on that big dump out of the large bounce, and then we traded down there. Soloway reported that we held it for a week before it bounced again. We're making our way back in. According to him, if we're looking for the level that it must hold, we must see this low hold here. If it gives way, the next stop would be around 1,550, and the big support for me would be around 1,400. He stated that a year ago, he predicted a retracement to 1,400 and believes it would go there. It's only a matter of when the chart itself can show that you have a head and shoulders pattern. It's already broken here, so he believes Ethereum can get bounces. He has a small long position here, similar to Bitcoin, essentially as long as it sustains this bottom end of support. He believes we can see a small bounce, but he is concerned about the chart. This suggests that there could be more decline in the near term, at least to 1,400 to 1,800. It's not that outrageous because if this trend line right here is about 2,200 and we're at 1,800, it's only that far to the negative. We were about 5,000, so the drop to 1,400 is significant. However, it's only a hop, skip, and a jump from here, and one panic sell will most likely bring us there. One myth, one manipulation, and whatever it is, Soloway believes that number one is comparable to high-quality cryptos such as ETH or Bitcoin. There are stages where he gradually accumulates, and he intends to purchase and accumulate significant stakes. He stated that he has been fortunate enough to witness previous cycles in other assets. Thus, he avoided the 65,000 level. He was talking about it dropping and has been on the sidelines except for quick swing trades. But if we believe like him that Fed and the government can never get out of the amount of debt that we're in, and the printing of money will eventually resume to bail us out of the next major collapse, then Bitcoin gets really intriguing at some point. So for Bitcoin, anything 20,000 or less. Soloway is just putting out typical buy orders like every 3,000 down. He simply adds another 25,000 or so till it is as low as it will go. He believes in the longer-term thesis Ethereum and that there's a use case that will persist. They have some concerns that must be addressed. He said that he dislikes how high gas prices have risen. Those have dropped dramatically, but he thought it was a little silly. He suggested that we needed to solve it, but with Ethereum. Soloway underlined that he began accumulating at 1,400, and at 1,400, we may begin buying and then simply be smart enough to pick a number as many investors do. He had to learn all the methods the hard way. Stocks, commodities, and cryptocurrencies are usually falling faster than we imagine. They also fly higher than we imagine. We need to be prepared for that, and don't be surprised if it drops to 800. We simply need to be ready if it does accumulate. Soloway was simply inquisitive about 2020 lows when we were down. Because Fibonacci retraced to this high, it's merely intriguing that we're hovering around the 618 Fibonacci level. The next level would be around 1,100 feet below here. Soloway frequently employs the fibs since they exist naturally and they are extremely potent. If he believed in technical analysis, he would believe that if anything happens organically in nature, it affects us as people since we are part of the planet. We are a part of nature just like anyone who believes in a moon cycle. Finally, millions of investors being impacted in a fraction can, without a doubt, produce a market change. I hope you learned something from this video. If you did, please hit the subscribe button and turn on the notification bell for more updates. Thanks for watching.